to the ThetaWave Trader and the Breakfast Club. It is the 18th of March, 2026. I wish you all a lovely and healthy, happy day, and I will get into the market right now. Looks like we had a nice little change right up at on a 4-hour chart. I was looking at this imbalance up here from here to here, and I was thinking that'd be a great place for it to stop. It went quite a ways up through that. So you start to track back through candles because we cut through candles. Look for some key areas, and there's lots of overlap here. Key areas to run up to. So it finished off right here on top of the right near the midpoint of this candle. I don't know. I was looking right there. And it looks like the bodies at least stopped there, but we had some serious wick action there last night or early this morning, 2 o'clock in the morning. We did get a 3 a.m. candle at 56. $60 somewhere around there. Yeah, 56. Right there is the edge of the 3 a.m. candle. Went through it, never came back and tagged it, just went. Okay. So let's get an overall consensus of where we're at here. So here's your premium. It's just been dialed in here. Downside objective. Look at the midpoint of all these candles here on the 4-hour. 852. That'd be the first objective. All the way down to the bottom of this up close candle here. That puts you right at the mean threshold of the last closed candle here. 796. That puts us right inside this BISI here as well. On a 4-hour. Right there. We are 4-hour. So there's some downside objectives to reach for. And always keeping in mind every little subtle change with our bull trap sitting right here. If we're coming back into this range, we want to see this get closed above, which it just did. And now I want to see if the bull trap lets go. If it does, then we're coming back into 50% of that range at least. If not, we should see it roll over, clear this, come back, give it a little tap, continue coming lower. And we're hitting at 850, so the macro is beginning now. You should see like here, down, one more time, and then up. Look for a breaker to form in here. Retest the breaker, send it up. If we continue to push through, I have an ultimate downside way down here. Those are my downside objectives for now. There's a couple little subtle ones inside here, like the rejection block around here. Anyway, good morning. I hope you're all doing well. Let's see if we're live here. We are. Good morning, Hadi. I'm very well, thank you. How are you doing, sir? How's everybody? Everybody safe? Everybody's still safe there? I hope so. Okay, so let's go to, we've got this change in direction. We have a little, have no real swing point here. So we got a definitely a market structure shift in a 4-hour chart. If we get down in here on a 1-hour chart, yeah, that puts us near that rejection block again down here. This bull candle here, 843, 845, somewhere around there. That puts us in this little cluster of data points here from 4 hours. So we'll see how we act inside that. And then the midpoint, which is also the 4-hour midpoint here, that's going to be the watch that area. See if we get some sensitivity off that area and start to go back higher. We can get a wick down there as long as the body doesn't close below here. But I rush ahead because there's lots of little data points that we have to keep an eye on first. All good. Good. Good, good, good. 847.50. Mm-hmm. Yes, sir. Yes, indeed. Okay, let's have a look at some of the other markets here while that continues to make a rundown. We also have 816. Yeah, that's right there. There's some overlap going on now. This midpoint here, that's 1, 2, 3. I bet we'll see something over here too. Mm-hmm. right here. The retest, come lower. Remember that little area we talked about there? Came back through it, came back into it with some wicks, lower. Let's look at some other markets here while this is unfolding. We're waiting for our another dig back into this and this on the hourly for 9:30, 10 o'clock, and 9:10 turn here. Try and get back a run back into this level would be nice. So we're looking for all this down stuff. Don't fear of missing out on it because we're going to grab that on the way back. Or we'll just get back in sync with it. If it continues to drop or plummet lower, we'll get in sync with it. Let's look at ES. Nice touch of the breaker there. Little breaker takes out this high. It's a nice little tag right there. Do we have downside objectives? Yeah, we still got all this down here still. All the way to 67.25. 67.25. Right up into the area we were looking for the other day. And then we've had a nice little reaction off of that. You want to see it break this and get back through this level here to start hunting for these equal lows. Take those two candles out there if you're looking for Dow Jones. Small little range, nothing significant in here until you get to the 50% mark. And this first bull candle after a swing, first bull candle to the left, trade through it, come back into it, send it higher, wait for the market structure to shift to the upside. It does. Look for a retest of this last up close candles all the way down to its mean threshold. You don't want to see the mean threshold close through. Trades up, comes back into it, tag multiple times, and then heads away. That's oil. Copper's on the drop, eh? Oh. This is the go, no go zone right here. Straight back into it. That's just copper. Algorithm running the market, man. Same thing. Doesn't change. So far, so good. Keep on climbing. Gold. Oh, where are we going in gold? This could be a significant drop for gold. Let me clear out all my stuff here. Let's map this out. We get through this candle here. I like to see it bounce off this line, come back into this line, and then send it lower. So this kind of thing. And this can come right to here. That's kind of like what I'd like to see. We'll see where this candle today ends. If we keep running down today and we close below here, below that line there, then that's the leg I want to see. But it's got to close below this line here. Then we get that whole breaker to bounce off of, to run lower. So this one here can come all the way up to here. So we've got a little bit of flexibility on that one. But this one here has to close below that point right there today. So if you're looking at overall run for the day, you want to see that keep going lower. So you do not want to see it break back above here. On a close, that is. So expecting more down prices today, which I'd like to see with that. And silver. almost the exact same scenario. I want to see it close below here, 77.11. It's got to stay down below that on a close today. So you can still run all the way up into here, still roll over as long as we get below 77. I'll take that one there. 77.60. So you've got this whole range to play inside right now. There's nothing off of here yet. I'd like to see a retest of 76.60 first before you reach 50. If you hit 50 first, then 50% of this range, then just wait. Wait till something happens after 9. This is good. I want to see sugar climb up above this candle here now. I want to see it leave out of here. Next couple of hours, I want to see sugar make a new high. We were looking for the government bonds to come back in and touch this level, right? There we go. Body's respecting it. Wicks come down inside. We want to see a portion of this stay open, and it did. And now we're getting the climb out of here. So I want to see if this, we predicted this days ago, the beginning of the week. We're looking for this little comeback, retest, and then go higher. So we'll see how we act inside here. You want to get through this little yellow box here, get back up on top of that if we're going to push government bond yields a little higher. But that's a nice little place to find some support. You don't want to see this close in. So that's like a 75%. Let me just double check that. There's 79%, 80% fill of that. We just used the wicks. 75% right here. So that's a C level trade. You want to see that start running back up higher. You want to see it get right through 4.249% on a close. And then we can start using this little area here as support to go higher. So get up on top of the yellow box, and then we start seeing that climb up a little higher. Wheat still banging around up in the premium area there. Foreign currencies. I think this is what Derek's been waiting for now, is this big drop. Euro dollar. It's hourly. We can get through that. Look for this little turn into the no-go zone. You want to see that come back, get tested on that, and send it lower. And then we have another downside target down here. British pound, same kind of thing, same kind of dealio here. We need to break through this level here. This has to turn into the no-go zone before we can start looking for down here. They're pretty much consistent. They're pretty much following each other lockstep here. That's the reason they're kind of tight on a euro pound. US dollars on another big tear back up into this premium. Watch, see if what kind of reaction we get from that. We could be just tagging this here into the consequent encroachment of these and then start to run back up again. So as this drives up into its consequent encroachment, these guys drive down into theirs, and then all of a sudden start to climb higher as this rolls over. If we get back up on top of this, that's going to push this higher and really drive these guys down. So watch how the American dollar acts inside that zone. It's interesting enough, it's hitting its zone long before these guys hit theirs. You see the British or the euro is just about to hit theirs. The pound has a way to go. The dollar's already in there. So these guys are resisting going down. These guys like driving straight in there. So if this suddenly reverses, you'll see these just clip this or sit right there, right where they're sitting right now. That's just also the consequent encroachment or mean threshold of this last up close candle here, right here. You see it? Or you're just hitting it now. So if we just bounce off of that, I still think we're going to come down into here. You might see that that if we close below there, that definitely look for this to run through here on the hourly. And you've got, oh, we've got 45 more minutes yet. So I'd say we're still coming down. And then look for a turn. Mm-hmm. Your euro or your pound, you can put your objective there to there. Nothing here showing you a sign of any reversal just yet. And this guy, euro's coming right into its level already. Just tagging it now. So what I just showed you here in terms of that little level there on the hourly, its mean threshold is the same thing we're looking for right here off this NASDAQ coming down to the hourly. We haven't quite hit the highs yet, just shy of it. So if we get a small little candle here, come back up, retest, and then send it lower, that'll be the swing point that we're looking for 9-10 turn. Oh, no, it won't be the 9. It'll be the 10. So if we just waft around in here, I want to see this create a small candle here, and then 10 o'clock just run up in here, create our institutional order flow entry drill, and roll over. And that can come all the way up to 948. We can see a retest up here. Let me just clone this and send this one up to there. And that can come, actually we'll put a little box there. No, 1 and 2. So we can come all the way back up inside here. You may even run a wick through here and send it lower. As long as we don't get a body close above here and a body close above here. Otherwise we have a deeper run inside this range here, targeting higher objective. Yeah. We're already on a turn coming back inside here in this range. Where does 50% put us? Well, 62% puts us right on our money, right where we're looking. Okay. Gotta get a body above here. This is being retested already. Now you want to see these highs get tested and this little breaker right here get taken from the upside and start hunting the upper range there. And we got till 9:30. And the first little kickoff at 9:30 of the open. But I'm expecting another little run back inside this range here for now, but not too far. I don't want to see too much of this get eaten up just yet. Oh, I'll get the white call. Stand by. Okay, so don't have the crowds we used to have. Hey, 7 people. So, as I said, we're coming back into this range here. Let's finish off these over here. We're already in the no-go zone again for a run lower for banks. Well, they're really chopping through here, so I'm looking for we got this huge pocket down here. We can get through this. Then we're looking for a nice deeper dive. CIBC still holding on. Its no-go zone will be right here. Royal Bank's already hit his, and we're looking for that to reject off of here. Laurentian, man, these guys are really holding on. TD's holding on. Its mean threshold has been hit multiple times, finally broke through. Market structure shift, came back inside the discount box. There's a small little no-go zone right there. Hit it multiple times, finally rejected off of it. Equal lows now, find support off of that. Now you want to see this start to really amble down, because the real zones that I'm looking at are in here and up here inside that range. So you want to see this roll over here one more time, get below 106.71. I'm going to take this guy here. Oops. This guy here at 106.71. And that'll be the line. I'd like to see it come back, find some support at that, and start digging down into here. All the way down to Neverland. You want to see it react off of here and start coming lower. Anywhere inside that breaker is fine. And you're targeting down here. Same kind of thing we just saw in NQ. We're inside that range. You want to see this retest here and start coming back up higher. You're inside this little 1 minute box here. I guess we'll have to include this as well. There. That'd be an upside objective to reach for. Once we tag this here, watch the mean threshold right there. So you want to see this pop here and start reacting off of here. this would have been nice to see this stay open, a portion of it stay open. The fact that we're actually closing it out now, not a positive sign, but hey, as long as we find support here and you don't want to see it get any lower than the mean threshold of that candle, the mean threshold of this candle, and start going higher. So you could put like 1 or 2 in there right now and start targeting the highs. You got to start reaching through this one here now at 652, get through that, and 654, then look for, you should have an open run for higher then. And if you use your take profit model 1, you can manage that. So stop loss will be sitting 1 tick below this close candle here. And if you lose that mean threshold on the close, bail, because we could come all the way down into here at 600. I'll put these in there because someone's going to say that I was form fitting this. That's good. Keep going. You want to see that keep running up there now. Morning, Hans. Start looking for this area down here. Once we lose this, we're in that first 25%. Okay, so there's the run up into the first level here. German should be doing the same thing. Ah, look at that. They just ran above there. So here's that rule that I've told you about multiple times. If you were going long there, let's say we went long there, and this was our no-go line, and we came down and we're like, okay, I'm just going to take that for a long. As soon as it breaks the high, what did I tell you? You pay yourself and move to break even. So you've got a small portion off there. If it comes back and takes you out, then this revisiting of this candle after the fact, not what you want to see. Not what you want to see. We've already hit the 50%, so it's just popped up in there. You pay yourself, and then all of a sudden it rejects and comes back down. So now you just say to yourself, are we looking for, we've got a small little imbalance sitting right here. We have an opportunity to run up, tag this, and then roll over and come lower. If your stop loss is sitting at break even, if you were break even off the top here, you would have been out by now. So what you got to wait for is wait for this to break above this and then start targeting this box above you here. If you're looking to go long anyway inside here, but you've already hit the 50% mark. So if you're out, it comes back, gives you an opportunity to get in long again with your stop loss sitting right here, and you're targeting that first high or rejection block. Keep in mind there's that little imbalance we see right here. It's just come back and tagged it. I'm bouncing off of it now. So just keep those in mind when you're watching price action. Very important data points. So you're looking for an internal range liquidity. I don't want to see if we start getting through here. You have to include all of that, I suppose, which pretty much puts us inside our premium box. So this is kind of like the no-go zone. And there's one here, here, and all the way up to there. So we'll see what kind of bounce we get off of here. That's the low we're looking for here. And I wanted to see that happen on the next hourly candle. Not the not this one particular candle we've got now. I'd like to see that give us our institutional order flow entry drill on the 10 o'clock and go lower. But that just tells me we could dig even deeper into here on the next hour. If that comes back, creates a wick. Either way, 10 o'clock is going to make a new high, start running back, or make a new low. And I can see right here. Let's take it all the way to there. That's the first little no-go zone. And then you've got the, if we incorporate this to here, that's your premium box as well, from here to here. If you just keep your no-go zone right there, that's the top of it right there. I see it starting to kick off of here. This whole area here, all the way up to that little, is it the Asia session? Yeah, the Asia's low. Bounce right off of Asia low and start coming lower. So what I'm looking for here is a reversal changing direction to go lower now. I'll put us right on there. And run above will put us inside that next zone here. The hourly breaker is sitting right inside here. Just waiting for our chance to see a reversal here now. I gave you this internal range liquidity hunt here, so you should be well feasted inside here for the low-hanging fruit. If you use the take profit model 1 that I suggested, you'd have paid yourself at 50. 60 got hit, so you would have been out at 50% anyway. So you would have ran up into 60%. Oh, right here, that didn't take you out, so you would have ran all the way up into 70, just shy of 75% before it finally came back and took you out at 62. So you would have had 70% of your trade off inside this. Then you just wait now. So you've got the low-hanging fruit inside here with that wick, and you got to be chasing this up. So you'd be done there. It would have come back and tagged you out. And now you're just waiting. You got some profits, and now you're just waiting for a Model 3, 4. I don't know why my regular trading hour gap is not marking it now. Sometimes it does and sometimes it doesn't. Which one are you using for that, Hans? I'm going to ditch this 931. Which one are you using? Because it's not working for me. Have you got an indicator that you use that shows that clear? Because mine doesn't pop up there at all. So that's right at the edge of the breaker. We've just hit the breaker here, and now we're getting a reaction off that, which is nice. Also the midpoint of this candle. If you're looking for confluences that overlap, that's the confluence. This is what good. Looking for that reversal. Have you got that fear of missing out going on right now? Like we called it right to the freaking line there. Wait for a setup. There's nothing there yet. It's called New Week Opening Gap, New Day Opening Gap, Regular Trading Gaps on Trading View. That's a retest there. I like that for a short. I'm going to short there. And I'm going to put a stop right there. We could still run up and take this high out, so you're going to keep it relatively tight. You want to see this whole price here now start coming lower. I want to see that act like a little bear support level. Let me get back to my little indicator hunt there. It's called New Week Opening Gap Search for. I'm going to highlight what you put there. Copy that. Let's put that in here. Paste. This one here. I'll try that one. I don't want it to close above here. If it does, then we're coming for the highs again. Yeah. That's all right. We'll get back in sync with it. Let's take in the high. Now I've got to wait for this to get broken on the downside now. That's got to be the no-go zone for me. We've traded above this level. This candle here for continuation, you can keep going higher. So what trade here? If you lose that, look for the rest of this. It's 25 or open, it's mean threshold, and then the low of that to get closed in. So that's a tap and start heading up. So far we're going higher. And we're digging right into this breaker here now. And its mean threshold is sitting right there at 010. Morning, Derek. How you doing, buddy? How's the bee's knees today? We're digging through here. Watch for the first one, second, third. There's the midpoint. See how we have overlaps now? We have this one that says I want to go higher, and this one that says if you close below me, I want to go lower. So then this one's the block. So one's running block for the other. So this one wants to go higher, but this level here has to get closed through it to go higher. And on this one, this level here has to close below it, and that's going to block it. So these two are battling back and forth right now. And you ask yourself, we've just got the highs taken here, right? And we're looking for this to go higher, and this is saying no, I'm looking to go lower. So here's where the two candles are battling. So watch right at 954. Wait for a close below that. This is when the mans, see how we're starting to use, if you're looking at it from a strength perspective and how the battle is winning or losing, we'll see how this is their attack. The attack is coming from above, and this guy's got to parry that and dodge and send it up higher. So I'm just watching the fight begin between these two candles. It's almost like a video game. Once you see it, you start to go, okay, now I'm looking to see who's parrying, who's dodging, who's keeping the force on, who's driving down or who's driving up based on the down candle and the up candle. And that's what I mean by down is it's a bull candle, but we're still looking for it to go down. And this guy's landing a blow right now. He may finish this guy off if we close below him. Look at that, right on. They managed to take one shot to the ribs, and he's still blocking it. He's spinning and turning, trying one last desperate punch through. This guy just wants to come back in and tag him, get some extra strength, and run through. It's kind of like a game once you watch how they're attacking each other. And this guy is right there, open and closing right on that level and driving through. Finishing this guy off will be, the finish will be, if he trades through here, we can get into a Model 3 or a 4, depends if that low gets taken. So this now becomes the no-go zone. Darren, you have it on your hourly chart. This one here. Oh, that one. I like the pieces that break it up. That looks good. So I'll stick with that one. This one's not working very well. I don't see any. I've got all of them overlapping now. They just get to the point where they're, because you're trying to use other trading hour gaps, and then you got the new day opening gaps and stuff, and they just turn it into mud. Oh, there's the retest. That's a retest. So now I want to see. Enough. This is just chopping around in here. We have not broken the low yet, but we have come back and retested this. So I'm looking for a Model 3 for range extension. Quick morning for me with the interest rate changes coming today and tomorrow. I'll just hold on what I have this week and get some work done. Good idea. I'm going to raise some queens this year, so that should be fun. How do you train them to be there's my first low there. And I'm just going to move that to maybe a little premature. I'm going to just sit above here now. We've just taken that low, so the rule is pay yourself there. We could still revisit this one more time. How do you raise queens? You like, what do you got to do to train them? You just kind of show them B fashion magazines for a month or so. This has got to start moving now. I'm going to move mine to break even. I don't care. That's not moving fast enough for me. Too choppy, so we'll just wait. I'm going to wait for some market structure shift here. Grafting larva. Wow. So you can be in there with a little microscope and tweezers working on this thing, or what? So what do? You're trying to, because they will oust the queen out of there. Don't they kill the queen? The ones they don't want to use? Wow. Now that would be fun. Just don't cut off any bits that you need, Derek. I could see the bee going, oh, great, I'm the first one. He's practicing on me. You get this one-legged bee because Derek's got the shakes. She's a queen bee, but she's only got one leg. Derek was just a little too choppy, a little too shaky with the old lancing tool. Nuke boxes and make sure you get the queen cells out of the starter box before they hatch. Oh yeah. So then you just stick them in a different hive. You're going to just open up new hives, or you're going to sell the queens? Because if I remember, the queen doesn't have a stinger, does it? Just remember, you can still be revisiting all the way up to here, which is 971. You can even wick into 977 and still be bearish. We have relative equal highs above us still. And we still have a big chunk of that breaker above us as well. Now we've got the 2 minutes, right? We have 2 minutes, 1 minute left. So don't count on this being the absolute low. Look for this next one to give us a little pump up here into this level, and that will give us our institutional order flow entry drill for a continuation on the downside. I wanted it here, and I wanted the institutional level to bring us to here, but if that's where we're sitting now, then I'll take the anywhere inside the breaker as holding, and then look for a reversal off the breaker. So at 10 o'clock here, let's just wait and see what we get at 10, and wait for the first silver bullet entry after 10 o'clock for a either a continuation on the downside or another run higher into this range. Because if we get on top of that breaker, then now I'd be like bullish. She doesn't have a barb on the stinger, which pulls out. Here's 10 o'clock. She does have a stinger, but doesn't die when she stings, and can sting multiple times. She doesn't have the barb on the stinger, which pulls out her insides. I probably will sell a few if the timing is right. I'm looking to raise 10. How long does it take to graft 10 of them? I suppose once you get the technique down, there's that perfect level right there. See that? So confluences, 50% of the regular trading hour gap lines up with the premium high of the BISI box, the high premium box. You just tag that. So now we're back between these two, scrapping away again. But I want to see 10 o'clock pump up here first. I don't want to see 10 o'clock come down and make a low here and then send it up. That switches stuff up for me. If we see 10 just run down here and just tag the bottom of this and then send it higher again, that will be that will switch things up for me. So you got to be prepared to change your mind if this starts to switch up on you. New month opening gap. Well, I don't want a new month opening gap. I want to see new month opening gaps are in red. I think that's red. Or is that red? I don't know. That looks orangey red to me. New week opening gaps are not. They are gray. Oh no, this is a new day opening gap. New day opening gaps are blue. New month opening gaps are red. Regular trading hour gaps. We'll put, I don't know what that color is. It might be green. This could be green, but I think it's gray. That's gray. That is probably green. Red and green. Could be. Anyway, that's what I'm looking for. So far we hit right into the top of that. This guy rallied one more time to give a swipe. Got right up to the premium box tag. And now we're dropping lower again. So we're finally close below that level. I want to see that drop down lower now. Let's see if we can get a little fair value gap form here. That's a nice low. It's going lower. I'll leave it like that, going lower. So let's see if we can't I'm gonna give this some breathing room here. I'm gonna put it right up at the top there. I'll layer this in. So if that holds, great. If it doesn't, then I'm going to wait for this to go, and then we'll try one more loaded on there, and then we'll take a bigger hit there if that trades through our premium. That's good. I don't want to see it get above there. Actually, I'm going to play it safe. I'm going to stay there above the premium. If it takes me out there, then I'll wait for a retest up here. Just because, and the reason for that is that if we end up revisiting the high here again, then I don't want to take it, and it continues to pop through. Then I've been on the wrong side for multiple data points here now. So I just want to see this first data point fail, and that's fine for me. Then I'll wait. It's got to be above that guy right there. That point right there. Just give me that low, and I'll move to break even. This will be a stress-free trade then, and then you can take one off there. You see all this waffling back and forth? Not what you want to see. You want to see a clean tap and go. Otherwise, you have to endure all this constant back and forth action, which can throw you off your game. Oh shit, that's right. FOMC today. I have to have some work to do this afternoon. That takes me out. No, it's already clipping through it already. Oh, that's going higher. That's twice. That's two down. Wait for something cleaner. It's gold. We can buy something back in gold. I like that, and then gold. Right off of here. Stop will go right there. Yeesh, there's not a lot of fun to play off of there. We'll let that sit for a bit, I think. Silver's already had its premium, so we have to wait for it to break through here. We consider that targeting up here. You'd be targeting somewhere in here. Once we get through here, on top of that, target that. How's our pound doing? We hit that 1 hourly. Nice kick off of that. Hit right into the box in the hourly here. Nice kick off of that. This refused to tag that level. I like that. Stronger one of the two. Even though they made new lower lows, I look at the way the wicks never hit the specific points. Not only do you look for SMT this way, I looked for SMT this way as well. That box, this box didn't get tagged. This one just got tagged. So stronger of the two. Hit right in the consequent encroachment of that level we're looking for. So now that we've traded above this candle, its mean threshold, you want to see that hold. You want to see a body hold that level. And start to run back up higher into this premium box again. That'll put downward pressure. That'll be your institutional order flow entry drill for continuation on the downside, and then targeting this. And then we want to see that drive through here. So we want to see this push up through this level, climb higher. That will put downward pressure on these guys to drive through their levels, use them as inversions, and then head for the discount box. That makes much sense. How's our DAX doing? We came back to the breaker. Just shy of it. Didn't quite tag it. You see that? I think we're like, how many freaking handles were we off there? What's the low of that candle? 67133. The high, 66947. So we're two handles away from tagging that low, and then we've had a reaction off of that. Wait for structure shift. Now you want to see these two lows get taken. Find some support inside this candle. Like a nice displacement candle down here below here would be nice. Find some support at that. So you want to see a fair value gap forming down here. You want to see it go down, back. That'll create the wick. So it'll come down here, create a wick on the next candle, drop down, come back up into that, or here, and then roll over and shoot down. That's kind of like what I'm looking for here. Right on that level, hey? Look for higher prices now. Look for 99.60. $99.60. Change in direction. It's too much chop for me. Get back into this little zone here now. So no turn here. We have tagged that. So 10 o'clock. Back off the consequent encroachment of the discount box. I still think we should run above here first at 10 o'clock before taking that low. If you want to go lower, it switches things up for me if we make this low here. Because then you're waiting for 11 or 12. What do you guys want to look at now? If this rolls over here, still have no low taken yet. This will have to come back to, oh, that's what we wanted to see, a nice displacement, and it's not working. FOMC. This is the breaker here. Good morning, Mark. Very similar to the DAX. Off the breaker. Breaker. Well, Mark, I'm in the Russell this morning. Acts better on these days. The Russell. Where is the Russell? Which one are you in here? Are you in this one here, Mark? MK2 June. Russell Futures. Oh, where's my fingers here? Oh, this one here. I got you. So look at this one. That's a nice little test to go lower. You want to see that come lower now? So I'll be targeting here first. Look at that. Nice Model 4 right there. Missed it. Model 4 right there. Perfect levels for Model 4s. Nice. Looking for the target down here now. I missed that opportunity there. So same as what we just saw here. Looking for the same thing in here. Come back to the new day opening gap, March 8th, 16th or so, and then see a reaction off of that. Institutional order flow usually occurs in 1 or 2 candles afterwards, but we're looking for something just to pop up above here and keep pushing lower if it's really aggressive. We're in our crazy Ivan now, yeah. So a nice little crazy Ivan up to this candle, or midpoint. We've just ticked up above here. Crazy Ivan. So we're at bottom of the hour now. So typically at the bottom of the hour, this is a reference to the hunt for Red October, Crazy Ivan, bottom of the hour. Tends to look back and then continuation on the downside. If he sees you, he's coming for you. If he doesn't, we should see the next price leg lower. So that's usually the Crazy Ivan that occurs at the bottom of the hour. And they can go all the way up to 38. See how that consequent encroachment of that 4 hour? Provides some strength. So every time we get to these consequent encroachments is where you have to look for the most sensitivity, I think. So we're looking for a retest of here. There's the new week opening gap. Look for 50% next now. Right there. And then the no-go zone is right there. Suppose we could put it to the opening. I got to get in the habit of starting to do that because I just use the opens instead of the bodies. So now what I want to see is so we trade back through here, use this as support, the next leg down. Watch right there. That's a full fill that can set heading straight back up again now. Perfect fill. So if you're on the wrong side of this, trades through, comes back, tags it, you can get your trade off short there. But if you're looking at long, that's the perfect place to get long, because if you're wrong, you get one opportunity to get your trade off before going lower. Stop loss will sit just below here. So you want that really tight. And once it's hit it, you don't want to see this revisiting here multiple times. It's got to leave here. Just watch that level now. See how we keep tapping into it? Welcome to FOMC. Choppy markets, man. Not clean. You want to see it tap and go, and it just keeps repeating and tapping and off the 4 hour. It's really going to get some legs and get out of here now. Bodies are still respecting it. Get some legs, get out of there. What did you say? What do you say with 38, Darren? 38? Oh, about 38. That's the bottom. That's the Crazy Ivan finish point. It was around 38 to 40. But usually 36, 38. 38 is usually the decisive candle that says, I'm done with my Crazy Ivan. 40, 42 will set a high or low swing point and then continue on, either coming for you or sending it lower. I like this one where it says it's mitigated 71% of the regular trading hour gap. Whoever made that, I like that. It's bearish. It's mitigated up to 71% of it. Didn't quite fill the whole thing. And the range is 98. I like that. That's a nice little indicator. Tradisto. It's great with time in a B. Thanks. Time in a bottle, yeah. If we look at the it's 27. Starts our Crazy Ivan. There's 32, 33, 37, 38 here. There's 38. So that's typically where you see it end. You want to see it go lower now. So this is 40, 42, and you're sitting in here in the middle of this. So you really can't make a decision in here. You're looking at a bear flag. You're looking at this SIBI. We have not closed above it. We haven't given it a little wick. We haven't closed above it. We try to do a little Crazy Ivan come back and get you, and hasn't quite make up his mind. Can't turn his boat around. So he's just sitting there dead in the water. You want to be a hole in the water. This is 40, 42. Got to keep coming. I think you're one of the only people that uses that, Hans. A lot of people don't look at that time in a bottle as being useful, but it is. There, see how we're trading below it now? We finally ran up, filled that, trade below it. Want to see it come back into it, give it a little tap here. And then you want to see that go lower. Right there. And I want to try and sell that. Though we can come all the way back up inside here. I don't want to see that. We've worked it already. So I don't want to see that starting to run back up in here. I want to see this start running back into here. So that mean threshold's my line in the sand. It's 45. Oh, you fucker. Can still come all the way up into here. And watch it do that. Tag that fucking thing and come all the way back down again. Well, that's the problem when you put these little, you just get nibbled to death. If you're demanding a specific price action and you just keep coming back and nibbling away your stop losses. And then if you put too big of stop loss on that and it runs through there, then you missed all the little tiny data points that it could have bounced off of. So watch this reverse down, come back down. It's still inside this box. I was kind of hoping that that trade below there would just give us a little tap and send it down, but FOMC, I can see Derek shaking his head right now saying, I told you, man, it's FOMC time. This candle's not important. We've got to swing here. Wait for a body to get above here. Ugh. Not worth it. Ugly. Ugly, ugly. I'll get it back. Okay. Let's look at some other ones here. Yes, what's that up to? Next macro begins. That bastard now. Watch it just take off right on this macro beginning. Welcome to Chopsville. What's Dixie up to? That's the 10. That's the 9-10 turn. 9's the turn for him. 10's the turn for him. It's a box-to-box trade on the hourly, so I want to see that go higher and start pushing this down now. Well, we're going into this little choppy. There's nothing else we can get you there on ES or NQ oil. First candle above here, then this one, retest. Oil's still relatively clean. Bitcoin is, let's look on an hourly level here. That's a sweet entry right there. Look at that level. For gold, I was looking for a higher in gold, and it just reversed right here. There's the reversal right there. Catch the short there. Discount box to box trade. Now you want to see this climb up on top of this and start heading higher, but we're in this consolidation again, so we may get another revisit of all these lows here, all the way down into here. Still potentially bullish if we can stay above here. If we can get above this candle now on a close, then you want to see that go higher into this range, and you're targeting way up here. Silver. Change, you don't get anything off of silver. Sugar, that's good. We were looking for sugar to go higher, and there she goes. Got nothing else in there. Again, not super tight price action. It's chopping around on you. It looks like that's what we're going to get this morning. There's not much else here for me to give you guys. Let's see if we get here. You're just inside this range here now. Off this guy. Nice little reaction off that thing. our discount box here. First order block, trade through it. We don't come back to it, so wait for the next one. We trade through it right there, come back to it, tag it right there, wait for the next one, trade all the way back into, and look where it comes back into. Right, that mean threshold right there. Right on the money. That's where you want to see it. That's your line in the sand. Always look at the ones, each one of these order blocks, and say, does the candle come back and revisit it? If it's not and reaches through the next one, use the next one. Don't worry about these ones back here. Look at the one it just broke. That's the important one. And then if it if you didn't get in on that one, then you look for the next one. You wait for this high to get broken. It gets broken there, so you can look at 1, 2, 3 levels. That's your last line in the sand. Your stop loss is usually one tick below the low. That's the kind of stuff you want to see. Touch it and leave. That's cleaner price action than that chopping around crap we see happening inside here. Right? So watch this level again. I think that's going to be your target for 11, 12 o'clock. And then we'll see if we rate lower. It's great with time in the bottle. We have previous day's lows. ES is probably not finished down here. Our equal lows. Yeah, I think ES is just going to make a run back. Same kind of principle, right? Make a run back into, you're already above here. Watch this candle here now. So if we can get above here, those will hold for the time being as we run deeper into this range. Then I'd expect to see a no-go zone from here. We can get back through there on a close and above that candle, then we're looking for a deeper run back into here. Otherwise, that's the no-go zone for me. All the highs are taken, changing direction, coming back in to revisit this no-go zone right here. See how we traded through it? Now we're back through on the other side. Look for a retest of this right here, and then send it higher. And if we come back into it and through it, then you're looking for, I guess we can come into it because this will be the reversal, albeit choppy in here. If we come back and retest that, 1, 2, 3 levels, send it higher. You're targeting, I guess we're going to target right here. Let's do this one here. That's the box we're looking for. Nice retest. Send it up now. You don't want to see this constant revisiting down here. I want to see that just leave here now off this candle. Just start heading higher. It's got to get through the mean threshold of that candle, get up on top of these, and start reaching for that level above you. That's more cleaner from my perspective. You see that starting to run up higher now. That's a nice retest. Send it up. ES. Just trying to get above this level here. And that first candle, got some wicks up there. We want to see if that body closes in the next 5 minutes above here, and then uses this as support to push through into that no-go zone. Get up there. Keep pushing. See, we're in the mean threshold there now. You gotta start digging through it. There you go. Now you look for the rejection block. Watch right there. I like that right here. Freeze it right on there. It'd be the last, right there is good. That's the top. I like that. Keep pushing now. Keep going. I don't want to see come back and revisit this now. I want to see that leave. So mean threshold of this candle broke. Come back to it. Send it up. You hit the rejection block now. So send it. Excellent. So far so good. You see how it's, once you see these precise levels, you want to see them hold, and then you don't want to see specific levels give way. So that's when it's moving the way you want it to move. When it's chopping around like this and it keeps coming back and taking you out, then as you saw, I got beat up pretty bad there. So, you know, you run the risk of, if it's not acting the way you want it to act, you're going to get beat up pretty solid. So I'm making my money back in gold right now. So it's, I want to make sure that continues. If you wait for it, it'll happen. You just, if you take some hits, you take some hits. It's no big deal. Wait for the market to clean up a little bit, and then find yourself a place where the market's a little cleaner, and make back your money, man. This is good. Now I want to see no more than right there, that high, or just coming into that wick. Ideally, you want to see an institutional order flow entry drill here, a little pop through right there, and then go back up. And it's on a 9-10 turn. So that would be a nice little turn right there. Send it up. the next candle come back down but doesn't break that low, that would be ideal. Send that up. And this is a Tibbs we're looking at here, right? So ideally 9, 10, either one of those can make that low. We just do not want to see this fill in here. And a 9, 10 turn would be a great time to see that keep going higher. So there's your 9. You don't want to see 10 come back down here now. I want to see 10 push higher. No more than half that wick. Otherwise 10 wants to pop through here and take this. He wants to be the low. This is the squabblers, right? The 9, 10, 11, 12 candles. They each one of them wants to be the higher, the low. Absolutely. Good thing you trailed my stop loss tight in gold. Quick turn, stop loss tight. Got me. So now I'm going to wait because we could still come back and revisit this now. And it's 11 o'clock. So we've got a high taken, turn here, come back, find support at that, and then target all this lot down here still. So you got to track it up. My target was up here, but you got to look at your range that you're in. There's 50%. Stop loss, you could trail it up nice and tight. Comes back, takes you out, you're done. Wait for another entry. That's a nice little tag here. I'd like to see that hold. Remember we said we want to see that hold right there. There's the 10. That should be the turn. Right off there. No fill. Send it up. Squabblers, hey? Is Twitter down? I don't know. Yep. It's down. It ain't moving. Yeah, X is down. I don't see it moving either. So see how this is waffling back and forth? Stay out of it. You got a 10 turn here, but you want to see that keep going higher. But you want to see it go right away, not just this banging back and forth stuff here. This could fail quite easily. That's your line in the sand right there at 909. You can see a wick through there, but you don't want to see a body close below 909. There she goes. When it's not acting the way you want it to act and not leaving, heading in for the direction you want it to go, and that waffle, you usually give it 2 candles or so. And if you're looking at time in a bottle, that's what you want to see. Hold that 10, and then all of a sudden it reversed on you. Took out your 10, come back to it now, come lower. Go to the bathroom, I'll be right back. Rolling over now. So you want to see if this holds, this last up close candle here. It's got to get back through here. And then use this as support for the next price leg higher. So it's eaten through that mean threshold there. That's the change in direction. Come back inside it. That gives way. Now you want to see this market structure shift here to the downside, this little swing point. See that close below there? Then we're going to start attacking this consolidation again. Let's watch, see how that breaks. Let's see if that, yeah, X is still not moving. There's the retest of the new day opening gap. Now see if we're starting to attack this consolidation. We've got bodies. The bodies are closing right on that candle's low there, hey? Little wicks. Not enough. You've got to see a body close below here. Keep an eye on the mean threshold of that candle. Take both of them together, and their mean threshold sits right at the top of the new day opening gap. Look at this mean threshold here. There's 50% right there. If we break this candle's high right here, look for you're already in the premium, so you want to see that take this candle and that candle's low to get whatever piece of price leg you can get out of that. I wonder what that would be like. We're targeting this here. That was the low. That little premium box right there, inside that small little range up there to there. That'll put you in the next price leg higher into the premium box. You got to get above here, find support at this, inside here to go higher. I think that's going to be it for me, you guys. She is definitely not a clean market right now, so I hope you guys have seen how volatile it is, how crazy it is on this FOMC days. I can get hit quite easily, just like everybody else, so keep your eyes on the prize. Wait for cleaner days. This is definitely not one of them. So be careful. Be very careful. What's this guy doing? We came back up, went lower. That panned out. Change in direction, came back, found support, look for a push higher. Look up here. If you can start reaching for higher, get above this candle, start reaching higher. Yeah, it was definitely horrible. Let's look at Dixie one more time. Yeah, this is just chopping around in here. From an hourly perspective, you've got to get above 1530 on a close. And even that, I'd say you'd have to get above the mean threshold of this candle. Right now, there's nothing bullish in here. This could still roll over and go bearish on you. And we just barely touched the hourly discount box. So this could quite easily come back up into this rejection or this no-go zone, roll over and go lower. And when you're in the middle of the range like this, from that low to that high, you're in the middle. You can argue both sides of it. So best to stay out of the market until you see something cleaner setting up. Anyway, that's it for me, you guys. Thanks for tuning in. Sorry I didn't get much out of this today. But that's all you can do with what you got, man. So anyway, thanks for tuning in. I'll see you guys tomorrow. Tomorrow will be the last day. No more trading again for me for till April, or unless I see you guys from in England. If I meet up with Ollie, then I'll have a chat with you guys and in the community from England, or I might trade from England, do some London lows. So those of you who are in a little earlier during London, and I'm got to give you your quote of the day. I do like these quotes for the day. I wrote these ones down. I did it again. It was only a matter of time, you guys. Only a matter of time before I spilt coffee. You figure I'd learn, hey? So far, I was lucky I had my lid on there. Oh, Jesus, how many times am I going to learn that lesson? Apparently a few more. Oh yeah, my quote of the day. There you go. Your greatest weapon is your mind. Train it to see opportunities, not obstacles. So until tomorrow, my friends, train your brain. Opportunities, not obstacles. So don't beat yourself up. It's all feedback, man. There's no such thing as failure. It's only feedback. It just tells you, you saw me take some hits here this morning. That, who cares? That is not the end game. So stay positive, man. Stay positive. The market's not giving you what you want. Just wait for your opportunities and they'll be there. They'll be there. So it's a good quote. Anyway, thank you very much, Curry. I appreciate it. And I will see you guys tomorrow. Enjoy your day.